Folks, in the meantime, my next guest says that the current tariff level would shave up to maybe 3/4 of a percentage point off GDP, but recession will be avoided. So I want to bring in Main Street Research, their chief investment officer, James Demmert. James, welcome to the show. Let's talk about this. So the resilient economy will sort of overshadow the the tariff impact. And these are sort of the things that you're looking at that sort of makes a difference here. GDP already trending at a pretty healthy rate. Fed policy and AI-led cycle. I want to go to Fed policy because we were just having this conversation. This is where I see the streets so divided. Some people are 0, some are 4 rate cuts. What are you saying?
You know, we think the Fed, we don't want them to come, but we think they come. By this, in the second half, GDP is going to come down from 2.5.
Right.
We think tariffs take it down to maybe 1, not even recession. But if we do get that risk, that recession looks imminent, the Fed's going to come, no question.
You think they'll jump in before? See, my problem with the Fed is that they're so, quote unquote, data dependent and so backward looking that we'd be in the midst of a recession by the time they answered the bell, and then they'd have to do something like a 50-point cut or a 75-point cut, which could actually make people even more afraid.
Yeah, and I think that's why we want to sort of think about the Fed not being a part of the picture.
Right.
You know, earnings are what is predictable. That's what's certain in this uncertain environment. And to us, when the Fed comes, they're going to be late. That's what they always are. So in our view, the Fed probably doesn't do a lot this year. And if they do, it's because recession might be imminent.
And you're somewhat bullish because of all of the negative sentiment out there. Now, this is just individual investors from last week, Thursday, that 21%, 22% bullishness, but it's also professionals. There's almost everyone out there, at least with the sentiment readings, are negative or bearish.
Yeah, the sentiment is crazy, right? It's like the same as the market low in 2008, the same as the low in 2022. And this is where, you want to say, hey, don't let the hysteria, right, stop you from amazing bargains in the market.
Let's talk about some of these. There's all kinds of signs out there, right? This rally the last few weeks have been amazing. So 3 consecutive sessions where 70% advancers, just one of them, right? But there's been so many different things. And you talk about these different trends that last week and the last couple of weeks have been really powerful.
Boy, they have. I mean, huge volume. It's a little bit selective. I think investors are, and they should, think about being selective in this rally. Can this rally have legs? Sure, we're still oversold. Those bearish numbers are still super negative.
Right.
So we think we got a lot of room, and we're in earnings season.
Let's talk about being selective in technology. This is intriguing. When I saw your list, because, okay, NVIDIA, but Checkpoint, I haven't heard anyone say like Checkpoint in a long time. And FICO's a name that I like a lot. And I think I'm down in it a lot, but I like it a lot, so I'm glad you like it. Why do you like it?
We like FICO specifically because, it's a non-tariff related company. They are not vulnerable. They're sort of a finance and a tech company. Yeah. They're based in the U.S. The stock is super cheap. It's consistent earnings, and that's what we look for at Main Street.
Yeah, there was a time you had Visa and MasterCard were considered tech names, too, so I'm surprised that's still in there. Checkpoint is a software security. Financial picks, J.P. Morgan, Berkshire Hathaway. It's hard to argue with either one of these.
Yeah, the financials are really a place that tariffs have no business, and they're not vulnerable. So investors here, particularly, you got to go after.
What about on the consumer side with J.P. Morgan? With that?
Well, our view, consumer confidence comes in tomorrow, right, Charles? Our view, that number is still going to be consistently strong. We're not concerned about the consumer.
Okay, and then you had a sort of some other picks. T-Mobile, I found interesting. Netflix, I think, kind of speaks for itself. But the T-Mobile idea, what's the sort of value proposition?
Well, we like the telecom space because it's, again, not vulnerable to tariffs, right? That's the.
I find there's a theme here.
There's a theme. And this is a company that's the largest wireless provider in the world. That is almost like a utility in today's world where we can't leave without those
Speaking of utilities, Duke Energy, there's a lot of utilities to pick from. Why Duke?
Well, first of all, we don't have enough electricity to fuel all the cyber and the AI, which is still alive. And Duke is a great way to play that space of expanding our electrical grid.
James, great stuff, my man.
Good to see you.
Appreciate you. All right, folks.